Good morning, everybody. It's Brian Caprice from Keep Trading Simple, and welcome to our Monday morning market breakdown. So we are rounding out October here. It's amazing that this month has just flown by. I know I say that every month, but I can't believe that Halloween is already here and leaves are changing, and it literally feels like last week we talked about September was wrapping up. So things are moving forward. This is actually a very exciting week. While last week we were low on news releases, this week there's just absolutely a ton of them. So it's just kind of crazy. And in fact, today is going to be um, there's some tentative news today with Brexit, which will obviously kind of dominate the market. And again, last week we saw the same thing. It was Brexit, 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 and then like the market just flatlined. And again, what happens is traders get kind of worn out, right? And that's what I think what we saw at the end of last week. So I'm expecting some big moves this week. Again, a lot of news, a lot of different tradable releases. So let's go ahead and jump into things real quick here today. So for those of you new, welcome. I'm very happy to have you guys out here. I want to go through kind of a quick 1 minute kind of who I am. The reason I do this is because my trading style is very different than a lot of people that you see out there. I'm a price action based trader. I look at candles and how candlesticks are formed, and I use areas of supply and demand. Okay, I'm not an indicator based trader. I always get a question, well, the MACD, you wanted to go short, but the MACD, I don't use that. I don't really care. Again, what I do is I reprice, so it's a little bit different. All right. I've been trading since about 2000. I've been both on the inside, meaning that I have worked as a financial advisor for one of the big three banks, and I've been on the outside, traveling around and teaching people how to trade themselves. Kind of been all through the process, right? I started with stocks, options, learned Forex, went over across, and I know how to do and I know how to trade futures. I just don't like the market, so I choose not to. Obviously found binary options, and I trade those as well. So trade a lot of different things. I've created a number of different types of programs from people that are meant to, basically have full-time jobs, right? I don't believe in sitting in front of a computer for about 16 hours a day. I believe that we can use technology, we can set alerts, we can use an if this, then that type mentality. And that's what I do. And you'll notice that the only thing I do is really do like boxes and horizontal lines is kind of the extent of what I do in my chart analysis. After leaving kind of, again, the world of traveling and helping people, I started doing this from home. And I was very, very lucky. I got to be very, very close friends with two different market makers. And hearing what they were able to do has actually taken my trading to a completely different level. So I got to do it from the retail trader mentality, then I got to do it from kind of the professional teaching people. And again, I did actually work on Wall Street, actually 2 blocks down from Wall Street. I used to stay right across from the New York Stock Exchange. It's always funny when a floor trader asks you if you can teach them how to trade. But then when I got in and learned from the market makers, it was absolutely, it's just amazing. The way that they look at the markets, what they, how they trade for the organization that they are. It's just totally different than what you would ever think. So definitely a rounded kind of background as far as trading goes. I'm a family man as well. I take care of those 3 kids there. The little one stays home with me all day, and then the boys obviously are in school, but they're all getting, the baby is at the grunting phase. She loves to trade with daddy though. She sits on my lap and points at charts. So right now all she has is and point. I don't know if that's buy or sell yet, so I don't let her hit the buttons. But she's ready. She'll be there soon. All right. With that said, let's cover the Nadex risk disclaimer. All right. Trading on Nadex involves risk and may not be appropriate for all investors. Trading can be volatile, and investors risk losing their cost to enter the transaction, including fees. The information presented here within this presentation is for informational and education purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results. Nadex contracts are based on underlying asset classes, including Forex, stock index futures, and commodity futures. Nadex is a registered trademark of the IG Group. Okay, basically, these disclaimers are more or less the same. Don't trade with money you can't afford to lose. Understanding the nature of trading you do is solely your responsibility, okay? Nobody can ever say, hey, Brian said to do this, okay? I said what Brian feels like he's going to do, but if you do it, it's totally on you guys, all right? So with that being said, let's go through here. This is not for the week of the 21st. My coffee had not kicked in yet. I will change this to the week of the 28th. There we go. All right, so this is where we are. So every week I do the top 3 news releases of the week. These are not the top 3 to guarantee movement. These are the top 3 what I believe give us the best opportunity for some big movers in a short amount of period of time. Okay, now when I say big, that's relative on the time frame we're looking at. All right. Every week these three change. We've had quite a good history with these. Again, I'm not telling you direction. I'm just telling you that these are the three that I feel will give the biggest kind of potential for large movements inside of the market. Okay. Number one being on Wednesday, the US Fed funds rate. Now, we are projected to cut interest rates again. Okay. Now, it's not so much the cut that I'm interested in here. It's also the FOMC statement that is aligned with the cut. But again, it's all centered around the cut. Sometimes the market believes that we should have more of a cut. You know, it's supposed to drop 0.25. Sometimes the market believes it should be a 0.5 cut. Sometimes it's 0.25, but then next time they're expecting to cut it one more time. Sometimes it will say this is, I mean, they may come out this week and say, okay, it's 0.25, and that's it. We're not cutting any more this year. And it's kind of like, whoa. Having that definitive news will cause market movement, okay? So just be careful about that. Now, there's a couple things, and I'll go over this in a second. Obviously, we got to watch out for the FOMC statement. We have to watch out for the Fed funds rate, and those both happen at 2 p.m. But then at 2:30, we have the FOMC press conference. And the press conference is where you get the unscripted answers sometimes, and there's some gems that can move the market in there as well. And this will affect not only the currency market, but it will also affect the indices. Obviously, dropping rates down always helps the stock market. It makes it cheaper for business to happen. So again, we can expect that. But if they say this is it, no more, then that's a little bit different as well. So it may that could also affect the stock market. So we will see. Number two, Friday, November 1st. This is a non-farm payroll week. Obviously, besides the Fed, interest rate cut, non-farm payroll is the biggest kind of market mover that exists. If it comes in exactly as forecast, then yes, it doesn't move as much. But if they miss, it's off to the races. It's a very, very big movement. There are companies out there, that when they're doing their trading tests, non-farm is one of those news releases you are absolutely not allowed to trade through. Okay, it's just one of those things. So you got to be very cautious with that one. It can be very, very fast and very furious if you're on the wrong side of that one. All right, number three. I just changed it as well. Now this is the Australian dollar CPI. Okay. Anytime you have something like a CPI when you're talking about prices, specifically a consumer price index like this, basically shows a level of inflation, and inflation is directly related back to interest rate changes itself. Now they did have a rate cut recently as well, but that doesn't mean they can't have another one. Okay, especially if this data is obviously not great, or if they're not seeing enough of it, right? So the reason why I always try to include one of the Australian data up here is because at night they are the only markets open. Okay. With that being said, it gives a lot of trading potential, right? Because there's no U.S. traders, there's no European traders, there's no London traders to kind of counterbalance this. So you can typically have spikes of anywhere between 30 and 40 pips. Again, some nice movement at 9:30 in the evening. A lot of people don't trade at night because they feel that it doesn't move, but nice little setups. And again, the Australian news releases have been really, really great the last couple months. Definitely been a huge fan of them. Great way to kind of take advantage of nighttime moves, especially in the United States. All right, so those are my top three. Now, with that being said, what I'm going to do now is I'm going to kind of drag us in for the week, as I do on all Mondays. What I'll do is I'll give us kind of a breakdown and kind of tell you what to look for. So you guys saw the warning on that last slide about Brexit news all week. So, Brexit is kind of like its own little soap opera, and there's supposed to be a vote today. And this vote is for, actually, I think it'll say it, right? Yep, whether or not to hold a snap general election. So basically what is happening in the UK right now is the Brexit deadline is basically this week, right? It'll be the 31st. Well, they can't make up their mind, and they're going back and forth on it. And Boris Johnson has made some valid attempts to kind of get it in there and suspend parliament and do this and do that. Well, he's not getting the votes that he wants. They're close. They're super, super close, but they just can't go over the number. And because they're super, super close, what he's talking about doing is basically going back to the drawing board and having an early election to re-elect people in the parliament so he can get his vote through, so Brexit can leave, and it can be it won't be like a no deal kind of exit, like a hard exit. The UK, the European Union now is actually on board with giving them an extension. So it is kind of interesting how it's setting up. I mean, it's not like they didn't know the deadline was here. And I think, the problems that the European Union is seeing as well at this point. I guess Markin was the last one, and he dropped his opposition to the extension. And I think the last that I saw that they're talking about, I think it was an extension to like the 31st of January. Yeah, UK agrees to give here. It just happened actually. It agrees to give the UK a Brexit extension until January 31st. So it's kind of one of these things. They just keep passing the buck down the road. Like I said, if this gets passed today, they may not need that extension. Or again, I guess he was looking for an election in December. So we will see. Unfortunately, right now what it is there's a lot of uncertainty for businesses in the European Union as well as in the UK. It doesn't necessarily affect us as much, but you're also seeing that the pound is going up in both of its two pairs as well as the euro is going up. So I don't know. It's one of those things, but Brexit news like this can definitely move the markets very, very fast. We had some great movement the last 2 weeks whenever we had some, concrete Brexit news out there. But at the end of the day, they still can't figure out how they're going to exit it. I thought the issues were done this time, but yeah, so much for deadlines, right? But that's happening sometimes today, so just to be a bit cautious. All right, going into Tuesday. So Tuesday, again, super early in the morning. It's actually Monday night for us, but you'll see we have a little bit of consumer confidence for the United States at 10. Again, consumer confidence is always a good one. A happy consumer is a good economy, and we'll kind of see what that is going. Where that's going to be, right? Last time it was down, the forecast is meant to be a little bit higher. We'll see what the actual comes in at. CPI, you can see at night. That's the one we're looking for right here. And again, this is one that doesn't miss often, but when it misses, again, that's where you get some movement on that one. The trend, same thing. You don't really get too much, but like I said, if this number is a miss, you get some good movement. If it's dead on, the market had already prepared for that, so that's not going to be much. So we're looking for a miss on this one. Going into Wednesday. Wednesday, we have our preliminary, again, our advanced GDP number, which is very, very important. Again, last time it went down to a 2. The forecast is a 1.6. This one has a little kind of a funny way of kind of sneaking in there and being a higher number. We'll see what that looks like. But again, advanced GDP as well as ADP non-farm employment change. Okay, so again, this is kind of the first read that we have on it. Besides that as well, again, we have the Canadian rate. It changed recently, so I don't think we're going to get another rate change in here. We'll see if they make any comments about softening through the rest of the year. They just, again, for those of you who don't know, they just went through their election time period. They basically have a minority government, which means there's going to be a lot of pressure on this new government coming in. Not new government, but the old existing government that is there now is going to have a lot of pressure on it. There's going to be a lot of, not skepticism, but they're going to be under a microscope for every little thing that they do. So it may make it a little bit interesting over here. We may see some rate statements. They may really try to push the economy, because if not, they're going to have some major political problems after this, basically in the next 4 years. Okay, I think somebody told me and quoted, and again, don't quote me on this one. This was told to me that I think the average minority government only lasts a year and a half or 2 years versus the normal kind of 4-year term. Okay, that they can call an election at any time with a vote of no confidence. So their economy crashes, they're not going to be there long. So I wouldn't be surprised if we see some type of statement in BOC in the rate statement of the press conference about that. Then all of a sudden we see here, this is the rate cut in the United States. Okay, again, market is expecting 1.75. It can absolutely be more than that. It can be less than that. It can be nothing this time. They may push it back till the next meeting. And again, they can make a statement that says this is one and done. That's it for the year. Okay, that would be kind of a big deal. Okay, like I said, I would be. I will, and this is not necessarily a recommendation. You guys can do what you want. I'm going to be completely flat at that point in time. I don't want to mess with that one. I may play it after the fact. But again, be very, very cautious at something like a Fed funds rate. Going into that night as well, you can see some building approvals, which is not really a big mover. New Zealand business confidence, same thing, not really a big mover. Manufacturing in China, though, at 9. Again, we're not trading the Chinese, the yuan, but again, manufacturing PMI is a big one. Whenever you see manufacturing slowing in China, again, that will affect the New Zealand and the Aussie, because again, they are exporters to materials to China, and again, everybody sees China manufacturing slowing, they're thinking, oh, the world's going into a recession. So kind of a number to watch if you're up. And then going into Thursday, you guys can see what we have. CAD GDP, again, very, very important. Same reasons why they're going to be under a microscope. If they're seeing growth slowing, again, economy starts going down, they're blaming the current guy. Okay, people aren't necessarily, he did not win the popular vote by a lot, so he is definitely under a microscope. And then personal spending in the United States. Personal spending is one of those ones, I don't trade it as often, although you do get some pops off of it. It's considered a high impact news release. It's not one of the ones that I've kind of folded into what I'm focusing on, but Doesn't mean that you guys can if you're looking for something to trade. Going into Friday, okay, again, obviously all eyes on non-farm payroll and employment change. These are the official numbers. This is the big stuff. And then followed near after that is the IFM manufacturing PMI. So again, Friday is kind of chock full. And you guys can see we are just packed every day. There's some type of high impact news release this week. Make sure your positions are protected. And again, I love it because I definitely love the trade news. So this is a good week for me. Last week was kind of boring, and this week is a good one. All right. All right, so let's jump over into the charts, and let me bring this over here so I can pull it down if I need it. There we go. All right, so what I'm gonna do is I'm just gonna go through basic areas on this one, and we'll kind of discuss where we are. Let me bring these back to 30 minutes, and we'll see what we have going on. So Aussie yen it's a position that we talked about, kind of we rallied past this gap, okay? I'd marked off this gap. It was actually over here, but I had it as far as kind of teaching. We saw some movement back again. So what happened, price kind of went up, and now we've had kind of a failure to go higher situation, right? We've tried to push back up. We've actually tried to push up twice, but what we were doing is we were bouncing off a lower level of buying, okay? So these two blue boxes from my group, these were kind of hard areas of basically buyers and sellers that we were looking for. Typically, we're smack in the middle. I typically don't like to trade them too often, and that's kind of where we're at. You guys can see there's a little bit of a gap from Friday into Sunday. But it really hasn't left the area. It's kind of stayed within the same kind of boundary. For me, really, I'm waiting till we get down to this buying area here or this selling area up top again. And we're kind of in no man's land right in the middle. You can see really that there's really not a whole lot overnight, just a little bit of movement back and forth, okay? Really, I think once US traders come online, we'll start to see some movement, and we'll see if we can get something higher or something lower. To the downside as well, if we do break below this line, or this box in here, again, we do have quite a run back down, and I think an overall potential target for short would be 73.37. It's a little bit of a wick over wick here, which is going to be a little bit of a speed bump, but I think we can get back down to here as one, and then probably somewhere back here in the 72 this week if we have if we have some Aussie weakness. All right, looking at Aussie dollar. Aussie dollar is kind of in a similar situation, although this one we actually have gotten some movement to the downside. But since that time, it really hasn't done much. So same thing, we went up, we went right into an area of sellers, kind of between this tan box and this kind of hard stop of these two up top. Again, you guys see this little kind of basing right here and then explosion out. That's what we ran into, okay? Yeah, it made two attempts and then collapsed further. And again, it did the same exact thing that we saw in the Aussie yen. We saw price come back down and hit an area of buyers. Now this one kind of popped off of that just briefly and then continued to push through. And you can see we got that Harry Potter pattern, right? This the trend continuation, the momentum breakout to the downside. Now it literally got down to basically a 3-to-1 risk to reward ratio is what we hit last week. And since that time, it's just stayed in that same zone. Okay, it's been kind of locked inside of the same 30 pip range. It did come back up to the very, very top. Again, we had a kind of an alert here that said, hey, let us know if it does break above, and it didn't. It got close, and then it came and swung right back down to the same bottoms. So the same buyers that stepped in last time are the people that stepped in here. And again, we're still kind of locked inside of that same sideways pattern. So just like this one, again, we have areas below that are very easy to see for areas of buying. And again, right now we're still sideways. Again, not really much of a gap from Sunday, but that's kind of what we're looking for. Again, we are very, very high on what I would call the curve. Again, looking for this to kind of turn around and come back to the downside. All right, right now, really no setups on this. There's not enough movement right now. But I'm just aware that, again, these will be speed bumps on the way down. And again, we still have this nice little area up top. All right. Now looking at euro pound. So euro pound. Sorry, I want to grab some coffee there. If you're looking at this one, again, we saw this morning on Forex Factory, we saw that both the euro was up, we saw that the pound was up versus the dollar, as well as the pound yen was up. Now, you guys can see, talk about indecision, right? Is Brexit going? Is it not going? Is it going to stall? And you guys can see, what has it done? It's gotten, I mean, it's just really, really compacted. So I don't expect a lot of movement in this pair today until we see the vote. Once the vote comes out, I think depending on what the answer is, we're going to see a bit of a spike. So for me on the 4 hour, again, I am looking at levels up here at, 86.90. And then to the downside, I'm looking down here at 85.50 is kind of areas that I'm looking for some type of a spike. Now, with the right vote, it can actually go more than that. If we're looking, this zone is only about 50 away, which is absolutely possible. The next little area, it's kind of over in here, and that's at about 120 pips. So it's possible, but that's quite a bit of move, right? That's quite a bit of move in one kind of burst. Ultimately, I'd love it to come all the way up to here, but you're talking about 193 pips. I don't think the Brexit vote will be able to do that. Even if it is a pass and they are going to hold an election, I don't know that just the election itself will shoot us 200 pips. Okay, so I'm thinking 50 maybe a bit safer, maybe up into the 100 range, up into here we could get something. But again, I think this, and again, this is 100 to the downside. I'm thinking most likely 50 could be the pop up, but we'll kind of see what happens with it. But you guys can see on the daily, I mean, we are just literally getting to the point where it's not even moving. Even on the 30-minute down here, if we take this from, that's Friday. Here's Friday, and then we hit Sunday here. You can see it really hasn't done anything. We're talking top to bottom, a total movement of 17 pips. So right now, the world is watching. They're waiting for the results of the parliament vote. Once we get that, we'll see some movement in there. So be cautious of this pair until that time. Euro yen, kind of the same thing with what we saw with the Aussie yen, right? It did push higher. It went right into that kind of area of sellers, right? That's what we had this gold line up here for. It pushed down, it came back up and tested it again. But again, it's wedged between buyers and sellers right now. It's kind of a rock and a hard place. Now, if you guys look over here, this is the 30-minute, you guys can see, here's the Friday candle right here. We ended in a zone, which is always great. And then we gapped out of the top of it, came back and retested it, and now have pushed away. So it's been a slow mover, okay, from here. It's moved about 30 pips this morning so far, and it went right back up into an area of sellers, okay? So if you look at this level right here, that is kind of right where we went into. Missed it just barely. Again, it's kind of roughly drawn. It should be off the bottom of the zone, which is there. So again, we did actually touch the bottom of it. I think that's flat. Yeah, I need a little bit better of a, right there. There we go. All right, so that's where we're looking right now. Again, I would kind of expect this one to come back to the downside. I think it will make a bit of a test lower. I know, obviously, the euro is up a bit today. And again, we've seen that rally overnight. But, I mean, nothing's really happened. So just like with the pound, the Brexit vote is going to affect the European Union as well. And again, this could shoot the same, shoot the same kind of movement. Although I don't think it'll be as violent. I don't think it's going to affect the euro as much, but same thing. Anything up top wouldn't be bad, and anything down below here into 119.62 probably wouldn't be a bad little bit of an area of a spike. We'll see. Like I said, I don't think this one is going to have as much movement. Looking at it right now, again, looking on the daily, we are basically in a downtrend setup situation. Again, we have a bit of a pullback right now, looking for more sellers, and there are some sellers above, right? We do have some right in the area we just ran into. You guys can see it here. This little bit of a doji, right? And then followed by a little bit above. So we'll see where the sellers step in. Again, this is going to be a U.S. trader-based trade once the U.S. market comes online. Looking at euro dollar. Okay, euro dollar, similar pattern, right? We went right back up into the sell zone, right? You can see it came back up and kind of retested that sell zone again, and it is pushed down, and it is bounced right off the 4-hour zone, okay? This was on Friday, and again, ending on a Sunday or ending on a Friday in that area is always a great little area. And that started a bit of a reversal. Same type pattern, right, as the last one. This one has a little bit more room to run. A little bit of chop down here that we're seeing. Again, you guys can see it over here. It came down. If we take the bottom of this green candle right here, it actually has touched the very, very top. So not surprising on where it's run to. On the 30-minute, it does look like it has the ability to run a bit higher, but we will see. It got kind of smacked around pretty good here. It may just be looking for more orders. But besides that, I would say that I'm bearish this pair. I mean, looking at this on the daily, we turned off of a, again, a larger time frame sell zone. We've gotten a pretty healthy push to the downside, right? We've gotten a nice little pullback, like our impulse, and we're in a correction phase again. But it's kind of turning, and it's going off a wick over wick. I can see that here. But again, I'm not seeing any reason why this can't come back down to the 110.24 range, about 70 pips from where we are right now. Kind of hitting back almost back, back down into 110. With the interest rate cut this week, that doesn't necessarily help the dollar, but we'll see what the policy around it is and what the future hike expectations. If they put a hard stop on this one, saying this is it, we're not doing this again this year, that's kind of some dollar strength talk there. So that may be what we need to kind of push this to the downside. So we'll see as this one plays out. Again, U.S. traders will come online today, tomorrow, and Wednesday is when the cut is expected. We'll have to see where price is. But again, there's some pretty healthy 4-hour zones that are building, as well as nice areas on the bottom. All right. Looking at pound yen. Pound yen, I think, will be an absolute mess today. You can see over 3 days on the daily, it hasn't done anything. You can see this is barely, I mean, if I stretch it out really, really big, it's still really hard to show any movement here, right? This is Friday, and then Sunday happens here. Okay, we've had a little bit back and forth this morning, and this has all been based off of, oh, we're going to do the vote, we're not going to do the vote. But again, it's only a 30 pip range top to bottom for what we've seen this morning. If you take this one on the daily, you know, the ATR, and again, it's dropping very fast because all this news is gone. You guys can see we're down to 143 pips is what this one moves in a day. We've been stuck within a 30 pip range. So again, if that doesn't show you that all eyes are waiting for the results of this vote, I don't know what else would. So again, be cautious. Now this one has two areas of selling up top. We've already bounced off the one. There's a second one sitting over there. The first zone above is about 180 pips, so or 160 pips. So it is within reach of a Brexit vote spike. Okay. The second one is a bit far. That's 350. I don't think we can hit that in this type of. That would be a heck of a vote. I mean, it'd have to be like, you know, anonymous, but you know, 100% not anonymous, unanimous, right? I don't think that's what we're going to get, but I do think we could potentially get a spike into this area with some pound strength, which could lead us back into somewhat of a short. Okay, I do think. I don't know that. Like I said, in the last week, 2 weeks, we've seen really a lot of, you know, pound strength. I think that's all justified because I feel that the pound was over beat up during this whole time period. But with pushing it back, it's kind of one of those things. It's like, listen, I thought we were making progress. We were getting back to where we're supposed to be. Everybody was happy with it. The market was happy with it. And now what are you doing? You're pushing it back even further when I think there was progress being made. So I don't know how the market's going to react to that one. I feel like it's going to look to go back to the downside. Again, any spike that may give us that trade setup. Okay. Now looking at dollar or pound US. Again, US traders are not online yet. Same bounce. Okay, again, we talked about this last week. It seemed like most pairs, again, the European pairs, the pound pairs were all up and very high up on the curve. They were hitting into, you know, previous selling areas. And again, this one did the same thing. It kind of pushed back down again. Did miss an entry here last week if you guys are seeing this one. I think I talked about this on Wednesday. Actually, it wouldn't have been with you guys. It'd been the other group, but missed an entry in this one last week. And again, since that time, it has just gone flat. Okay. As you guys can see, Friday to Sunday is right here. And again, this one has a little bit more movement, right? If we take the low here, this one has had about 45 pips worth of movement top to bottom, so a little bit more than the pound yen. But at the same time, it's still, you know, it's the 3 o'clock spike here in the morning, right? The 3 a.m. spike up, the spike back down, the 5 o'clock spike up, and the spike back down again. And really, it's not much different from where we were. When US traders get in line, we're going to find out if today is going to be a dollar strength or dollar weakness day, and hopefully see some movement. Hopefully, we kind of debunk this one to the downside. I'd like to see this head down and wipe out some of these wicks that we have here. Typically, these wicks signify some buyers, but at this point, I think, again, I'd like this to kind of go through and get us clear. I'd like to get us back down in this 126 range so we can start making attempts back down here. Okay, I would definitely be into this trade. We'll see. Going across, let's look at dollar Swiss. So dollar Swiss is kind of interesting last week. Had some good days, had some bad days, right? Very fast movement, and then it kind of grinded its way higher. So it's one of those ones. Again, we had a little bit of a setup here. We made it about 75% of the way through. I think we got a little bit greedy on our target, and again, it flipped. Again, what it's doing is it's driving back up. Okay, 3 days of straight down was nice. It didn't just give us a pullback. It didn't grab any of these sell orders. This was an area right here that I was really kind of focused on to see if we could break this for a bit of a retracement. And we were. It came up, retested. And again, you guys can see the triangle over on this one. It's harder to see on the bigger one, but not the best drawn triangle of mine. But again, we had that momentum breakout back on this move here, and the goal would have been this blue area. So we pushed above that now. We've had a little bit of a pullback, but for me, this one, you know, we had the momentum breakout in this area here, the break of the zone, and use that as a springboard. Here, we're getting the same kind of setup, right? It's pushing above. It's trying to create some white space. You guys can see a triangle formation right here on this lower time frame. But here's what the problem is, okay? How much farther north can we go? Okay, looking where price is on the daily, you'll see this is kind of the start of the move. That green dotted line is where this 3 days of a push down started, which also was flooding with these wicks as well as these descending wicks. So it's in an area where we've already seen selling. So going long into an area of sellers is always dangerous. So that's kind of where we're approaching right now. And you're seeing that, you know, as of right now, it made one valid push forward, you know, early at 1 o'clock in the morning, pushed down, and, you know, it's now tried again and failed and kind of pushed back. So we'll see if this is going to be a second kind of attempt and failure to go any higher. in this zone, which could be a trigger for us to take this one short. Okay, I wouldn't necessarily be surprised about that one. Again, I'm sure you guys heard about the one, I guess, not ISIS, the IS leader that was supposedly, I guess, died or whatever this weekend in a Delta raid or whatever. If there's more data that unfolds about that one, again, that's a geopolitical event. Anything that is bad dollar will start to bring this pair back down again, which would also match with what we're seeing on a technical basis. Okay, so again, those two things may match up. We may have a short possibility in this pair as well, so just keep track of that one. Now, dollar CAD. Dollar CAD does have a funds rate this week, although there's not expected to be a cut. They had one recently. As you can see, this one had gone all the way back up. It had flooded with all the highs, and it had made a valid attempt and pushed all the way back down, and we're back down in the 130.60 area. Now, we are in an area where we've seen previous buyers. It was the last time we were at kind of a near-term low. That was back in July. And what we've seen in this one, again, you guys will see a Harry Potter trade there, Harry Potter trade here, and again, we're back down in that area again. Now, this one is different. You guys can see the blue here for me is where this zone really, really starts and starts to get deep. And it's actually made some attempts down, but actually not been able to hit it. So for me, in this pair, it's low. I have to say I'm a bit more bullish with this pair. But again, we need some bad Canadian news, right? And like I said, we do have some Canadian news this week that could lend us into that. Again, there's the monetary policy information, the overnight rate, again, not expected to change, but anything that talks about a weakened Canadian government, again, that could give us the pop we need in this pair. You're also seeing where's the other one at? There's another one here too. No, I can't find it, figures. I'm just going to scroll through, but basically the overnight rate is going to be the biggie for the week, I think. I'm sorry, there it is, the GDP number on Thursday. Okay, so there's two different news releases this week that could potentially give us something that talks about CAD slowing, CAD weakening, CAD recession. All those things kind of go right into the technical picture of getting a pop. Now, if the dollar gets super, super weak because of non-farm on Wednesday, again, that could be a catalyst to drop us through the bottom, although it's been a long time since we've been, this low. Yeah, October 2018 was the last time we were below 130. So we'll see if that's able to continue to push the downside. I do think we'll get a bit of a bop. Again, how far, that's going to be the bigger question. We'll have to see how low it's able to get in here before actual news releases coming in. Okay. Now looking at dollar yen, last but not least, why is it a Harry Potter trade? Do you know the symbol that's on Harry's thing? It's kind of like a lightning bolt. It like kind of jags down, goes back up again, and then pushes lower. That's why I call it the Harry Potter trade, because it's kind of a reverse of Harry's like little lightning bolt thing on his head. All right, so this is the epitome of a flat market. Check this one out sideways, right, on the daily. Really starting from Thursday, flat, 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 flat. And I mean, if you're looking at it, it's literally been channeling back and forth within this little bit of a zone here, okay? The zone, if we take the peak, which it hasn't even really been able to do the peak much, you're talking about, it's about 50 pips. So, I mean, it hasn't been not tradable. But you can see as far as, is it trending? The answer is not really, right? It's not been able to get as high now. It's not been able to break below this bottom level. There's been a few different kind of like small setups in here. And again, this was one that ended last week. It came down here. I should actually send this across. A very, very small trade. We were risking 5 for 18. Not necessarily the best setup for Nadex itself. It was a spot currency trade. And here's where we ended on Friday right here. Okay, this little kind of very, very kind of nothing. What did we do? We gapped higher, we came back and retested, and again, it pushed up, and it just stayed in the same area. From where we ended on Friday, there's the close. Here's where we are right now. We're talking about a 5 pip difference. So nothing crazy on this one over the weekend. Again, same scenario. We are very high on the curve. It's not pushing as high. Here was our peak, and then on Tuesday, it made another valid attempt, didn't do it, and where we are now, same thing. It's having issues pushing any higher. I do have what one of my students calls the guitar strings. I have 3 areas of selling right above, starting at 109.13. The next one starts, meaning the closer line is 109.48, and then the last one is 109.98. So I do have some sellers, areas that I'm looking for potential selling above, but right now, again, it's just holding sideways. We're not in a trending market. We'll have to get a little bit more, hopefully we'll get some movement today in this pair, and then tomorrow morning we'll be able to determine whether or not we have a trend setting up or not. Okay. All right. So that's it for the charts, guys. Like I said, a lot of news this week. There's a lot of stuff going on, so we need to make sure that, again, make sure you are prepared. Make sure your positions are in protected positions, particularly, again, if you have a trade on. Okay, when one of these big news releases is there, you don't want to get completely wiped out and sent in the other direction. There's no point in holding something into a news release if you don't have to. Again, I prefer to trade the news retracements, although you can trade them before based off of your technical analysis. So if you have any questions about anything I said today, this is how you guys can reach me. You can go to the website. You can email me directly, support@keeptradingsimple.com. Check us out at Twitch. We do a kind of a nightly assessment, as well as you can check us out on Instagram. We do a lot of the news trading over there. All right. So I will see you guys tomorrow. Thank you for joining me on this Monday morning, and have a good trading day. I'll catch you tomorrow morning at same time. Take care.